joining our London Open update. So going to be building up to be quite the week, really. See some interesting things go on. We remember there's still the Eurozone backdrop going on, but definitely seems to be a real shift in the markets. And it seems to be that once the rating agencies start to act, what we actually get is the opposite in terms of price action. So sometimes the rating agencies or when they cut ratings, when they act on their ratings, can actually be a bit of a positive indicator for the markets. That's what we've seen in the last couple of times. That's what we've seen in the last couple of days. Obviously on Monday, when I had this, it was a slightly different type of thing. But today, things were a bit more cautious on Monday morning. Today, there's some interesting developments which I want to point out. So let's get on with this. Let's take a quick look. The first thing I want to show you is the Aussie dollar. We are still bullish the Aussie dollar. And the main reason why, if you look, it is testing. This is a daily chart. It is testing its 200-day moving average. So really, really key resistance level here, just above 104. So that's kind of coming in at about 104.14. It's tested as high as 104.06 this morning. And if we continue with this kind of positive theme to risk, and then it could push through here, thus targeting 105. Let's take a look at some of the shorter term. So we can see, we'll take a look at the short-term charts, but I just want to draw your attention to the MACD down here. So that's your directional indicator, and that is still pointing higher. So this is a real level to watch in Aussie dollar at the moment. Just let's look at the 30-minute chart. As you can see, still looks fairly nice. I'm going to draw a bit of a line there. Still been moving higher. The MACD is still higher. Now, it has pulled back a little bit. I think if we do see a break below this 103.85 level, then we could potentially see a bit of a further pullback towards the 103.50 level before we potentially go and retest those highs at 104 or just above 104. So it's kind of an interesting one. Obviously 104.50, this level here, acting as real near-term, actually this level here, acting as kind of really good near-term support. We need to get through here, through those levels then, to be able to target 105. So where we are now, as I said, in the immediate term, we'd look for it to hold above 103.85. If it doesn't, then we might see a sharper pullback towards 103.60 before it goes again to try and test that 104.15. If it gets above 104.15, then we have 104.40 on the upside, ahead of kind of 104.60 and then towards 105. So that's the level at the moment. Right now, it's had quite a nice morning. It's done fairly well. We'll take another look at the 15-minute chart just to show you. As you can see, it's done really nicely all morning, all throughout the European session. It did break above that 102.15 zone. Didn't manage to sustain it. It came off again. But then, since London has really been at its desk, and things have been kind of pushing back higher again. But it is going to be a bit sticky. We always knew it would be sticky around this zone. But it is something certainly to watch. Now, the target now to beat is at 104.15 level, and that's what a lot of people are going to be looking at, whether or not the bulls can push it through there. If it can't, but we believe that if it does break through this kind of trend line here, so again, as I said, the 103.85, look for a pullback to about 103.60. And if we get below 103.60, then we think something else is going on in the market, so we might not go back to those 104 levels. But if it's just a normal bit of a pullback, normal bit of a breather, we're still up on the day, then we're happy with that and looking still for further gains. In the Aussie, it's one of the major crosses that we like. It kind of feeds into this theme that potentially we're seeing some differentiation in the markets. Even though not as much as some people think, we're not seeing the commodity currencies really pull away. They're still showing that they're very vulnerable to sell-offs. Obviously, they sold off quite sharply on Friday. Added to that, they're moving in the overall direction with the euro this week, which has been, generally quite positive. But we would caution against saying that, we're going to see, prolonged uptrends in anything. We still think the risky assets are fairly vulnerable. but we just think in the very short term, and that's how I'm trading at the moment. I'm trading in the very short term. With FX, I always do anyway, but we've got some kind of interesting price movements going on elsewhere. Now, let's take another quick look let's start from the beginning, shall we? Let's take a look at Euro. Obviously, there's been, this is a 15-minute chart, failed again at 128, which was the high yesterday. So yesterday's high was 128.09. This morning, it's been 128.08. Has failed there, so what we're seeing is a bit of a general pullback. And we've seen it in the Aussie, we're seeing it in the Euro, so the risky assets are coming off a little bit as we come in. But then the backdrop generally has actually been quite good. So late last night, we did hear that potentially the Greeks and the IMF, so the Greek officials and the IMF officials, would actually potentially give in to some of those private sector bondholders' demands, so that a haircut could be agreed before the deadline, before basically the March 20th deadline. But really, it's not March 20th. We need that to be implemented today, which is kind of interesting. On the one hand, it's very good news because it means that Greece won't default on the 20th. But then on the other hand, it means that a default is actually more likely further down the line. Because obviously, if the private sector bondholders in Greece aren't going to be, aren't willing to take as bigger losses as the Greek officials and the IMF officials wanted, then that means that Greek debt won't fall back to sustainable levels as quickly as the IMF, etc., forecast. So it is a bit of a mixed blessing, really, and maybe that's what the market's pricing in. Otherwise, it just seems to me like this 128 level is a bit sticky. Certainly we like kind of certainly in the short term long euro dollar positions and look to square off around 128.50. We think it's going to be sticky around here, as you can see, all the way back to kind of 127.50, back up to 128. On the short term, 128, very much like a double top there. Definitely something that we're watching out. We're just looking for it to see if it can push above there, and get potentially to this kind of 128.50 highs here that we saw on Friday, before that kind of big sell-off that we saw Friday afternoon on the back of those downgrades. Sorry, let's take out the word default from the dictionary. We don't need it right yet. We don't need it just yet. We might need it down the line. But this is kind of an interesting development. Again, in the short term, potentially a bit of a double top forming out gate. That's why we're seeing this sharp pullback. Obviously, very good support at 127, and then also very good support at 127.05. Above what if we are to break above 128.05, so kind of break above 128.10 now, so that would be the highest level in 2 days, and then we'd actually look for 128.40 and then about 128.50 to 60, and probably think that would be enough. These are the markets to kind of book your profit. It's not really to let positions run, we think, because there's still an awful lot of uncertainty out there. We're still leading up to next week's Eurozone Finance Ministers meeting, then the week after that we've also got we've also got a EU summit to try to sort out this crisis. This is the hourly chart, and again, this kind of temporary double top here is a bit concerning. Depends again on how good the sentiment is. Now, we did see kind of double top forming last week at this 128.50 level. We were able to obviously kind of that caused us to fall and then recover a bit. Certainly on kind of the hourly chart, kind of feeding into that lower downtrend. So we really do need to break above this 128.05 level to really see a bit more traction in this cross. And let's just take a look at the daily chart. So again, a lot of congestion around here, but it's whether or not we can break above that 128 zone. We kind of think we will. We kind of don't think that we're going to break above that 128.50 zone, which is just here. So this other blue line here, let me take away this one. Confusing. We kind of don't think we'll get here because we do think that, overall, the longer term, we're kind of in a, or medium term, say, we're still bearish. We're still looking for kind of 125 in the kind of coming weeks. But certainly in the short term consolidation, we are in the middle of a kind of prolonged fairly calm consolidation pattern, but we don't think the 128.50 will breach. Because if we break above 128.50, then we're going to target the 130 level. So this is a 21-day moving average at 128.72. If we were to break above 128.50, or break above 128, then we've got 128.50, and then we've got really key resistance at 128.75, which is that 21-day moving average. So kind of worth watching. On the daily, I would just point out there, we have had the tiniest of crossovers of the pink line across the blue line. That's a bullish signal on the daily MACD. We need to really get that to me is too early to tell us what, or to potentially give us a signal that there's things are turning, or that the prevailing trend of euro dollar is moving. But I am going to keep my eye on that. So that's just worth watching. We're kind of taking a breather at the moment, even though in the short term we do think consolidation is going on. In the longer term, we still think there could potentially be some weakness, and that euro, along with the other risky assets, is still vulnerable. So do watch out for that. Now, let's take a look as well at dollar yen. It's been quite interesting, dollar yen, or the yen crosses generally. We have had Japanese officials come out and speak out against the strengthening of the yen. Yesterday, we had the finance minister come out and say about the strength of euro yen, very, very, very particular. So he has said that they were looking at euro yen closely. Today we got again some more Japanese officials coming on the wires. They didn't mention euro yen specifically as they did yesterday. However, they did say that they would react to any sharp moves in FX, or any excess volatility in the FX market, which is definitely worth watching. So as you can see here, this daily chart, let's take a look at the hourly. Again, kind of range trading. I did 76.50, very much acting as good support. However, this break below, the fact that the next kind of main resistance level now is 76.75, still looks very weak below 77, is my view. If we look just on the daily chart as well, incredibly weak within its kind of long-term range. Again, on the hourly as well, again, very weak within its shorter-term range. Let's take a look at what it's doing just today. We've seen it pull back just a little bit. It's bounced off support. This is a 15-minute chart. Let me just remind you of that, sorry. Bounced off 76.50 support, 76.60 support. Had fallen down as low as that. And we did think, we did say on Monday, and we continue to believe this. We continue to believe this, but we think that that the short-term downside for dollar yen is actually quite limited, and that's largely because of what's coming out of the Bank of Japan. So, if it was to get below, it would really need to get below 76.55 for us to even try and target 76.35. But we really think that, certainly in the short term anyway, there's a limited amount of downside because of this intervention fear. In the medium term, or slightly longer term, in the shorter term, short to medium term, we tend to think that we could be in a bit of a period of consolidation, trading sideways a little bit. But we still think that getting above 77 is a bit beyond dollar yen. So our longer term outlook is still fairly bearish. But dollar yen is quite an interesting one to look at. When it claws that gain, it really does impact the other crosses, because it really shows kind of dollar strength, or potentially a bit of position squaring in the other kind of risky assets. So, we do think kind of around this zone, the dollar's looking fairly mixed today, even though on a broader based basis it's looking very weak compared to the yen. But certainly in the short term, we may see just a bit of consolidation of dollar yen heading up towards that 76.75 level. If we do that, that will kind of highlight dollar strength, which could actually weigh on euro dollar. So euro dollar is potentially moving today on the back of people basically taking profit about 128, and that's why we've seen euro dollar sell off come off a bit this morning. It's still kind of midway within its short-term daily range, currently around 127.60. But as I said, we could see a deeper pullback and then kind of another test of that 128 level, which should keep other dollar crosses really in check and within this range. So we're kind of range bound. So yesterday it looked like we were going on this really nice move upwards. We've gone from 126.50 all the way to 128 at one point, or to break above 128, and then we kind of fell back in the range. And we kind of think we're now back in the range trading game. And that's completely what we believe for most of the major crosses anyway. We would point out 76.85 looks like the top right now. We kind of 76.60, even 76.55 on the downside. So it could be a fairly tight range. But obviously there, I would just point out, certainly in the very, very short term, the MACD is pointing higher. So we could retest some of those highs, which would also weigh on euro dollar. So as we said, just take another look at that euro chart just to give you a few more levels. So as you said with euro dollar, below 127.50, potentially to kind of these lows here, around about these lows here, so 127.20 to 30, should act as fairly good support. Then potentially we can make another test. But again, it's range trading, and it seems to be 128 on the upside, with 127.20 just above kind of 127 on the downside. So do watch out for that, because it could, range trading. We could be range trading potentially until we, number one, either hear something out of those Greek debt discussions. Number two, we have got some important data coming out of the US today. Obviously, we've got some PPI data, so some inflation data, and we've also got some industrial production data coming out later as well. So that is kind of worth watching. Now, someone's just asked about the UK, and I was just about to look at the pound, funnily enough, to get all those majors out of the way. So let's take a look at just the price action first. Let's go to the hourly chart. So as you can see, what this shows to me is that it seems to be basing below 153. So 152.70 sorry, was the low, was its low from Friday. Doesn't seem to like it there, and it's kind of bounced up. So in the short term, we think further downside is actually quite limited to just below 153. And in the medium term, we're still fairly bearish, but we think in the near term that there could be a bit of some more kind of a bit of consolidation. Certainly, we could kind of bounce back. As you can see, we have been testing the 200-hour moving average. That's the red line on this chart. Really key to this level now. And then kind of 154. So between 153 and 154, we think we could be kind of, that's the range for sterling. Someone's just said today's UK jobless number is important for sterling. Interestingly enough, obviously if we were to get a really shock move, so people are looking, so the average Bloomberg estimate is that the ILO unemployment rate for November stays at 8.3%. So that's the key figure to look at, because remember, the way that economic data works, it's all kind of relative to expectations. And they are looking for the claimant count rate to remain at 5%, with the jobless claims change for December to rise by 7,000. So that means that there's 7,000 more jobless in December compared to November. That will be an interesting one to watch. The thing is with jobless data, the unemployment, you've got two jobless data. So you've got one, the unemployment rate comes out, and that's a much more backward-looking number. It takes data from November, looks at it that way, and that tends to not have such a big impact because obviously unemployment is a lagging economic indicator. So it does. So you could say that a lot of this is priced in already. But right now, certainly the PMI surveys anyway suggest that unemployment rate is going to be fairly steady. Not in the right direction, of course. 8.3% is still horribly high. But it's going to be steady around there. It's more the jobless claims, so it's more the kind of claim account rate and the jobless claims change 1,000. They're more kind of important because they're more timely indicators. And again, 7,000 for the jobless claims change in actual numbers, and the claim account rate is expected to be 5%. So they're the numbers to watch out for. If we see a jump in unemployment, for example, that would be very negative for the pound, for all the pound crosses, including euro pound, and we'll take a look at that in a little bit. But because it would obviously boost the chances that there would be more QE. But overall, I would say a very messy start to the morning, and tight kind of ranges. That's what we've gone back into. So yesterday it looked like we were on risk on. Today it's kind of more tight ranges. There's a lot of uncertainty out there. We still think things are vulnerable. So whenever you hear, risk is back on, trends are changing, take that with a bit of a pinch of salt and be quite careful with that. Now let's take a look at euro pound. Just go through the charts. As you can see, it had a really nice pullback yesterday, actually, as risk was on. But it doesn't seem to have been able to sustain gains too much above kind of 83.30. Certainly hasn't been able to get back to those highs above 83.50 that we saw on Friday before that big sell-off. So again, it's really messy action between kind of 83.15 and 83.30. There, obviously 83 is a key support level now, and then we'd look at kind of 82.80 and then just above 82.50 on the downside. And obviously on the upside, we've got to be targeting that 83.50 zone. So things are looking fairly messy again here. So, the way that it seems to go with euro pound anyway, is that when things are doing very badly, when sentiment really takes a dip, or, if we're seeing kind of, a lot of profit taking, something along those lines, or bad news, then we tend to see a euro pound sell off very sharply. As you can see, we saw it there. Today, the sentiment is a bit more mixed, so we're seeing a bit of a sell off, but potentially it could just pull back to around the 83 zone and then bounce higher. We haven't actually got anything physical or any new data out really. That's all negative. If anything, I suppose the new developments in Greece are slightly positive in the sense that it makes a near-term default less likely or disorderly default less likely for Greece, even though it does make a default at some point more likely because Greece's debts are still way too unmanageable. But we would say that this potentially could be a bit of profit taking, hence the messy price action that I've been talking about. So it's like going in one direction. It looked like we were going in one direction yesterday. Hang on a minute, no, we're going back to some profit taking when we get to those highs. Investors very quick to take profits, and that's kind of my advice certainly to all of you as well. So with kind of the pound again, we think kind of short term, kind of limited, or certainly for euro pound. In the short term, we'd say, potential for weakness, but in the longer term, there's a lot of different factors out there, but we think that potentially, euro pound could try in the shorter term to retest those 83.50 highs. So that could be quite, an interesting one. Let's take a look at some of the shorter term price action. Yeah, again, this kind of like above this kind of 83, this 83.30 level is proving to be, quite a tough zone to break out of. So in a very short term, maybe a bit of a double top here at that 83.30, which was, so 83.22 was the high today. It's probably more 83.20 rather than 83.30. But it is proving to be quite tough resistance. We might see a pullback to the 83 zone. But generally, kind of, if you look where the red line is on this chart, so just 83, just above 83, this could be the range that we're in. So it could be a very choppy morning ahead. Again, as I said, obviously, depending on what comes out of that, the UK unemployment. We've got construction output out of the Eurozone today, but that's not usually, that's second tier data. It doesn't usually move things. As I said, the producer price data is going to be very important in the US. Now, why is this? It's because the US meet next week. There's a chance that what they'll do is actually implement an inflation target. So a bit like what the ECB and the Bank of England does. Potentially an inflation target for the US may make QE more likely. So we are looking closely at all inflation indicators right now. Remember, PPI in terms of price data is more of a lead indicator, because PPI, if you think, is at the top of the inflation pipeline, and CPI kind of comes a bit further back. So that's kind of an important one to watch. We've also got a little bit of housing market data out as well, so that's interesting. Now I'm happy to take a few questions if you've got any for today, or take a look at something else that you guys want me to look at. Let's just see what we're doing here. Great, someone's asked for the DAX. Just bear with me one moment. I'm happy to bring that up. In fact, look at it here. Now this is interesting because this is very interesting in the whole kind of equity we were approaching some really key resistance levels, and we've stalled just a little bit there. So as you can see, in the DAX, the key resistance level of note is 6379, so just below 6380, and that's 200-day moving average. And then obviously 6,000 is really key support. Just on the short term, we've had an open and slightly lower on the open in Europe. So what we could see again is kind of failing at this key support levels. It's currently at 6320. It had tested 6380, but that really is the key resistance level that we're now looking at with 6,000 on the downside. In kind of the nearer term, but on the very short term, I would probably look for kind of 6,300, then 6,250, and obviously kind of on a weekly basis, we'd look at kind of 6,000. And if we get below there, then it suggests something more sinister is going on. I would point out though, certainly on the near term, we've still got a really nice kind of trend line there. Support obviously coming in at 6,200 as well, so I did mention that. So they're the key levels to watch: 6,300 on the downside, then 6,200. If we get below 6,200, we could potentially test 6,000, but it would suggest that maybe the news flow out there or the sentiment out there is really drained from the market. Now, I also would like to bring your attention, just over to one moment, to the S&P, because something similar is kind of happening there. So as you can see, this is the SPX 500, so the S&P 500 in the US, making real hard work of this really key resistance level here, this 1,300 level. So it's been testing. If sentiment drains to the market, we could see another pullback, potentially to that kind of 1260 level, which is again its 200-day moving average, and then kind of another retest. So that's kind of what to watch out for. Now, someone said they'd like to talk about oil. Now, I did write about oil yesterday. Let's take a look at Brent. And the reason why I'm going to look at Brent is purely because it's open. So let's see how Brent is going. Again, it's kind of down a little bit, but it did manage to break above its 200-day moving average at 110.50. So it's currently trading at 111.37. As you can see, a lot of interest in oil. Obviously, there's kind of a lot of potent stories out there. Saudi Arabia came out yesterday and said that it wanted, on Monday, and said that it wanted oil above $100 per barrel. Likewise, there's still stresses in Iran with the Straits of Hormuz. So all of this is kind of interesting. But as you can see, 115 is really, really, really key resistance on the upside. Hasn't really been able to break above that since July 2011, so in about 6 months. So that's really capping the upside. With the downside, certainly in the short term, this kind of 110.50 level, and then in the longer term, we'd probably look at 107 and above 105. So in the kind of long, our base case for oil is that, yes, there's many risks out there to demand. Emerging markets slow down. We saw so what I'm basically saying, this is Brent crude oil, 115 on the upside, as you can see, been really key resistance. On the downside, 105 has been kind of really key support. So we think kind of with oil, oil is going to trade sideways. Now, someone's just asked a question why Brent is more expensive than USA crude, WTI, because traditionally it's obviously tended to be actually less expensive, but it's because of the supply glut in Cushing, so in Oklahoma, where all the WTI comes in. They had just tons and tons of supply because they weren't being able to ship stuff out fast enough. So that is why. Brent crude oil, however, there were many disruptions on it. Obviously, there were disruptions from the Libya crisis, Arab Spring, Brent being a bit closer to the Arab world. That had kind of an impact on it. So that's kind of the main reason why. But going back to what we think with our kind of longer term forecast for oil is that there is still supply constraints. Obviously, OPEC has constrained supply, and they haven't really boosted supply in the last kind of 4 years in any meaningful way. So when you look at kind of the oil price, you've got to consider these things. And we think this kind of range trading, so this oil moving sideways, if even if the global economy deteriorates, we think we'd really need to see a whole blow off the Eurozone for us to get oil below 95 and then to kind of fall lower. If we get just kind of Europe muddling along, it's not fantastic, quite weak growth rates, then we think oil will remain between 105 to 115. Now, the risk to us isn't actually oil falling from weaker demand, it's that the demand picks up. So it's that the US continues to show strong growth, China picks up later this year, Europe kind of gets over its initial crisis and does fairly well this year, and oil price actually rises towards those kind of 125 or 120 highs. If it does that, then that could cause a whole nother wave of concern about growth slowing because of high oil prices. So it could be a bit of a vicious circle, if you like, because there is a lot of liquidity there. There's still QE going on in the US, in the UK, maybe in the US. In Europe, they're doing their version of liquidity support too. And yet, OPEC is really, they're being quite insistent that they're not going to boost supply, which is kind of interesting. So someone else asked the question if the US ban Iranian oil, then short supply, then could oil run up to 150? Well, it's mainly looking like the Europeans might be the one, or the EU might be the one that bans that bans kind of Iranian oil exports, which is a big deal, of course, because it is the Iran is the world's third largest oil producer. But however, Saudi Arabia did say that they would actually up their production. So when I try and make deal with Iran and its oil, we don't think that's really likely, because essentially Iran, it needs money, and it's the only place it gets money from is from its oil exports, so it needs to be able to export its oil, so it's not really doing them any favours. I would say that, Iran's muscle when it comes to the oil price is actually fairly limited. So just my view. Anyway, everybody, we're over time already, but thank you so much for joining. A really interesting discussion that we just had. Good luck trading today. As I said, choppy ranges, watch out for it. And hopefully you guys can join me on Friday. So thanks again, and good luck trading.